The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is the Wednesday edition, Wednesday the 23rd of May, and this is what I'll be looking at to see whether the volatility index, that VIX index, is going to make its leg D up today. If it does, that's going to put all the indices, let's put it this way, all the technical tools that I love to look at, it's going to make them put them in synchronicity, because what it does is it takes, let me just get I want you to put and now I can't do that. There it is. Got it. There we go. Give me 1 second. I want you to be able to show some charts today, and I also wanted to be able to look at what do I have? I have a Droid. So I wanted to see the charts as I do it, because this is going to be a very important session in terms of chart analysis, what I'm looking for, why I'm looking at it, and so here we go. In the Dow, which is down 146, what we were looking at, now I'll run the numbers. The Dow's down 146 at 12,356. The S&P's down 16 at 1,300. The Q's, the comp index is down 30 at 2,808. You've got gold down 33. Oh man, I just didn't see anything in gold over this whole period. It's just gold is going down at 1542. So now that doesn't mean we couldn't have a bounce, but that's all there will be. Silver is at minus 76 at 2740, and you've got high grade copper down 8 at 340. I have to tell you, this is one ugly market. Crude oil is down 91 at 91.66, and bonds are up $1.50. Now, what I wanted to do is this. In the chart formations that I look at, and this is what I show subscribe. Actually, I'm going to take a moment here. I'm going to have I have a very difficult position, because I usually do not like to talk about my trader's corner, what we have. It's not that I'm superstitious or anything like that, but I do believe in the trading gods. And when you show hubris, when you show some kind of a little showing off, those trading gods are just waiting there. And what does it mean? It's the ego. That's really, they're no trading gods. The trading gods are your ego. But I have no other way to be able to have people who listen on the radio, even if you're watching a Tiger TV, to be able to really grasp how I go through my particular techniques. I spend a lot of time on every single every single opening call every day. 5, 6, 7, 8 charts, and each one takes an incredible amount of time to put together, because I want it to be a study. I want you to get a sense as a subscriber, as a client, as Steve likes to say, that I have this veracity behind the moves. There was a period back in early April where I was taking very small losses, 1%, 2%, maybe 3%, but that was the choppy part of the market, and I know not to trade in that market, but the charts look good, but the market was not good. And then I said, I'm stopping. I'm not going to continue like this. And then from the recent tops for about 5, 6 weeks, we've only stuck with a trend, the major trends of each stock or each sector. And to me, that has been the very best thing that you can do. Why? Because my expression, when you trade the tide, it means if you throw a piece of driftwood out and the tide is going down, that driftwood would keep going out. So in other words, if you want to go long in a bear phase, you can do that, but you've got to have spectacular stocks. Like one of our stocks made a recovery high today. It was up huge, and it's been up huge because it's playing the tide of that particular stock in that particular sector. We only have 2 long positions as core positions. Mostly we go short, and not mostly, we are on the short side. So I'm going to take a risk here. I said in the den I'm going to do a lightning round, and we've got a number of stocks written, typed in there. They're great, so I love to look at them. Let's do that. And I'm going to include another one right here. So let me just write these down. DBO. And then I've got, let me just double check. Read wants LNKD. These are great stocks. I want to look at these stocks. So I just have to go through something so that you can understand why I am looking at what I'm looking at, and the reason why I want to get into these positions. They might not work out, but the fact is that, and I'm also writing at the same time as I'm talking. Okay, so here we go. In my opening call for subscribers, have I still got it? Yes. This is what I show every single day. I show the Dow chart. This is the Dow daily chart with the ChapmanWave notation. I've kept all the notations and everything that we've done. The ChapmanWave falling axe breakout over there. I've got the cup formation, the double top, the triple top, the left side, right side, time price match. I've kept it because these are also study pieces. That's number one. Number two is, besides all the commentary that I type on the chart, usually straight after 4 o'clock or as soon as I can, either that day or night or the very next morning, I will add more to this particular chart of the Dow. I discuss the pattern. I discuss the Roman candle, ChapmanWave Roman candles, if they're there. I discuss the doji. I discuss the wide-legged doji. I discuss what you can anticipate if certain things happen with this particular technique. So it's not even the chart. It is all the techniques in the ChapmanWave that pertain to that chart. Then I show my overview section called Overview _market today, and that gives the bigger picture, smaller picture, and it gives you also the very short term with the 120-minute chart of the Dow, right, if I can point there, and the 120-minute chart of the volatility index. Made it clear that in the daily chart, I'm anticipating that if the volatility index can break above 2512, I think it was 2512, that would start leg E up in the daily chart, and for the first time we will have the dollar, bonds, and the volatility index. I call them my three bears: VIXI, Dixie, VIXI, Dolly, and Bondi, and they're really key as far as I'm concerned. Especially the volatility index, the VIX. I also show here the TRIN index. This has got an incredible accuracy rate of calling for either a slide the next day to negative, even though the other day the Dow went 40 cents, or no, it was $1 negative. It still went negative after the futures were up real sharply. And that's just a technique I've developed. And it tells you when the trend, which today is at 209 already or higher, is starting to get overbought. And there's another technique that I use. Okay. Trend lines. Look at this one trend line straight down. It says if the Dow can decisively break above that, that's going to be a good thing on the short term. It becomes a better thing if we can go above the previous high peak, and it shows you here the same thing for the S&P. This is the daily charts. Okay. I also show, let me go to it here. Every day I show, if I can just identify it, there it is. I show the E-minis. I show the 10-minute, usually it's the 10-minute and the 120, or it's just the 120-minute chart, if that's the clearest of all. But here I show that there was a spike up in the morning to about 13.13. Then it plummeted down to 13.93, and then it tried to rally. That was at that particular time, which is usually very early in the morning. Sometimes it's very, very early in the morning. But what I also showed is how the 9-period exponential moving average of the 120-minute chart of the E-minis, S&P E-minis, that was resistance. I show the MACD and the stochastic, and then I write commentary as well. Okay? And then I show the various charts. I don't know if I'm going to show the right chart here. Which one is this? Yeah, Joseph E. Bank, which we've been short for quite a while. It's just starting to base out now. It could even have a little bit of a pop at some point, but that weekly chart is saying, hey, it's in trouble. Look at the MACD, the depth of the MACD, the fast-moving average to the slow-moving average. Look at the monthly chart arching over. And we've been short this for 6 or 8 weeks, I think, I'm not sure. So from up in the 51s. So I'm anticipating that we will see it break at some point, and at some point in June maybe, the 39.15 200 period exponential moving average should be the target. I say should because you never know, but that's the thinking. So I go through each one of these charts. I go in great detail. I discuss them. I discuss, if I can find it quickly here, a chart that I'm not going to be able to do that. Well, I go through every one of the charts, every single position we have, or just about every that I can get to. I show in detail what we're looking at. I talk about round numbers. You remember the Apple round number is 644? It's not getting back there in a long time, believe me. So we shorted the stock that made a high round number at 103. It actually then, 2 round numbers, and then it made a fractional new high, and then it pulled back. We shorted it. It went to 104. We shorted just over 103, and today it is down. It is down quite a bit. So, in looking at the charts, that's what I like to do. So I also show what we might not even be in. I show the TLT. Now, okay, enough of this. I just wanted to show the detailed work that I do, why I do it, and how I like to explain it. So let's go back to the charts right here. And I just want to show you exactly what I'm talking about. The TLT, this is the Lehman 20-year T-bond fund, made a doji high at 124.44, 124.45 yesterday. Made a doji high. And that says the MACD and stochastic are still very, very strong until the TLT closes decisively under 121. We've got to consider this to be some kind of a high-level consolidation on any pullback. The weekly chart I spoke about for a while as having this rectangle formation that it can go from the low of the 109s back to the 124.25 area. Well, that's exactly where it is. But, and this is interesting, the monthly chart has a very powerful leg that says, be careful, because decisively over 125.03, and that starts another leg up in the monthly chart. So I talk about that. I show the chart very often of the TBT, which is the 200% inversion of the TBT. But even more important, let me go to the dollar index, and then I'm going to go to go to both calls, and I'm going to go to, and I said we're going to have fun, and we'll have a lightning round. Now look at this. This is the dollar. I said I was waiting for the dollar to break above the left side 81.79 high, peak F top in the ChapmanWave on the 13th of January. We've made a double cup formation in the master trader series that I usually do. We call those DPs. This is in fact a very important type of pattern, because if it breaks decisively above the left side high bar, you have to be careful, because that says, especially in leg D, that if it recycles higher, other things can happen. So if it pulls back, we'll talk about that. We'll come right back with Mike in New York and our lightning round callers. Be right back. Basil Chapman.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Dow's down 148. S&P's down 14. We're going to go straight to our first caller. We've got Mike in New York. Hi, Mike. How are you?
How you doing, Basil? Okay. BAM, Brookfield Asset Management. I'm worried because I'm long the stock, and in the daily, weekly, and now monthly, it seems to be below the 9 EMA. So
correct.
How would you manage this position, and what are the parameters if you
Okay, now, folks, we're looking at BAM. That's Brookfield Asset Management, trading at 30.66, down 44 cents. There's a pattern that can, at certain times, be extremely bullish and at other times be very bearish. And that's that arch pattern in the daily from the low that hit the 200-period moving average, exponential moving average, on the 10th of April at 29.97. It ran up in just 2 peaks. And you can see what I've done here in the notation. I used the ChapmanWave instant restart back on, let me just give you this, there we go. Instant restart, and then it works out exactly right. It goes AB, oops, that should have been, oh, no, I'm sorry, that should have been EF. That's what I wanted to do. EF, it goes, yeah. I had a choice of calling it a parallel wave count, but the way that the MACD and the stochastic pulled back, I decided that would be based on the criteria. Based on the criteria that I'm setting forth here, I decided that would be the start of a brand new move because it had the characteristic that I like to talk about, which has the characteristic of the flat-based restart. And that flat-based restart says that you get a chart pattern that after a peak D looks very much like an instant restart, but the price keeps coming back to the trend line. And that's a hint to say whatever it goes to on the upside, that at some point it's coming down. It's just a fantastic projection out that says, looking out, regardless of how high it goes, it's going to probably come back and test at least the most important low. In this case, is the low of 29.77. Right there, 29.77, and that was the low of the 30th of January. And on the 10th of April, it went to 29.97. So it went to 20 cents higher. So it still hasn't broken it, and to this day it hasn't broken it. But the arch formation here is very much different to the arch formation that formed back in November through December, through the 14th of December. This one is one that says, be careful, because it's like a coda, a final thrust to the upside that fails, and the low that was made on the 10th of April at 29.97, you can see we made it 4 days ago, 29.98, 1 penny above, but it's getting real close. Now, let's talk about the weekly chart. The weekly chart made a peak D, didn't give a sell signal in the MACD, but went to a higher high, a peak E. I just want to double check. That's 99.99, 299 is very good. It went to a peak E doji top on the 4th of May. Yesterday closed below it. To me, that's a negative sign. So this is what I'm going to say. I don't know what price you're in at, but I would absolutely take at least some part of my position off if it closed under. This is going to be a little difficult. Okay, let me just quickly finish my market scenario, and I'll tell you why. Because this is asset management, and they are probably highly leveraged to the market itself. Is that correct?
Yes.
Okay, so then I need to do this. What I want you to finish saying is, because the dollar has now made its leg D up, that's the requisite in the Chapman wave. That's what we anticipate, and it's at that point that the song says, the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. So the dollar says, you've got the dollar very strong, but on a shorter term basis. The reason why I wanted to talk about my three bears, Bondi, Vixie, and Dolly, is that the USM, that is the daily chart of the T-bond contract, the June contract, has a high of 148.23 on the 17th of May. It's trying to retest that now, and it's in a beautiful up channel. These up channels are very important. Why? Because it says that if you break decisively above, in this case the green line, you can go even higher. If you get repelled in this area, you can start going down, and what would that down say? The 200 period, the 9-period moving average, 147, is really important. But if bonds in the next week start to slide under 145, all of a sudden you've got a different scenario. So I'm saying that there's a chance that we're getting real close to an overbought situation in the market, unless there's like a 275-point decline today. That means that the volatility index could still go to the 28. If you don't mind, I'm just going to finish my thought with you if you hold on to the break, and then I'm going to go to the lightning round guest. So hold on. I'll be right back with Mike in New York.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, we're back. Basil Chapman, Dow's down 146, S&P's down 14, and this is really important as far as I'm concerned. When we are looking at markets, we've also got to take into account that there are inflection points, there are moments where the technical indicators, certainly the ones that I like to use, are absolutely critical. I've been talking about the 28th is probably the area of the VIX where we will get some kind of a really strong rebound. But I don't believe that we can make a major turn in this market at this particular point, having dropped 1,000 points, until we get that incredible overbought, that spike in the volatility index and the trend that really says, okay, that's it, we're washed out, now we can have a pretty darn good rally. So, Mike, with that said, I just wanted to show you that there are certain indicators here that are saying that from this moment on, they can go higher, but it's also from this moment on that we can start to see some kind of sudden increase in the volatility, making us within a day or two of an actual turnaround of some kind of consequence. I'm saying we could. So this is what I'm going to recommend to you. Some part of your position should be, you should lighten up on some part of your position if you close under 30.49. That's the 200 period moving average in the daily. Maybe just lighten up like a tiny little bit, but say to yourself, okay, that's one step. The next step is if it closes underneath 29.98 even though that's the area where it's liable to have a bounce, money management says be careful, because the weekly chart will start to get even have even less strength and only weakness involved. And the monthly chart, as you said, has that potential to really turn down, because the stochastic's only at 73% and the MACD is deflecting lower. So what you really want to see is that somehow or other, today it's down 39 cents, down 1.25%, the same as the market. What you really want is for it to somehow hold the major low of 29.98 in the next 3 sessions, preferably trying to make a leg B up above 31.33, and that will say to you, whew, at least you've survived this 1,000-point decline in the market. Now you're going to handle the next. But I would only say to you that the weight of evidence on this particular chart says that unless in the next 2 weeks it can close in the 31.70 to 32 area, it's liable to break down and test the 28s. So I hope that helps you, because if it tests 28s, it could go even lower. So I hope that helps you, Mike.
There are more points on the downside than the upside for me.
That's the way I'm looking at it until we get a major
washout,
sentiment washout, that spike on the upside and a washout in the market. Thank you for calling. I hope that helps you.
Yes, it does. Thank you.
Great. So now let's go to our lightning round. X-Man asks for AOL. Now AOL, regardless of what the market is doing, remember, folks, there are always some stocks that just ignore the market. They're just kind of happily moving along. AOL must have had some. I'm not sure what the story is. I should have followed the story, but I never, even if I heard it, I wouldn't remember what the fundamentals are. But AOL is at 27.20 right now, so lightning round. It says it's making a high-level consolidation. Maybe there's takeover, whatever the rumors are, I don't know, but I am going to say that it's holding really well. If you're long, I would not look at it as a short right now, because it's held this way. Something's going on that says upside has more potential in a high-level consolidation than the downside. But if it does slide underneath 25.64 is the low, 25.40, you can have a real quick dip to the low of the rectangle formation. Remember, rectangle formations, that's 23.58 would be the low there. Rectangle formations can last a lot longer than your patience. So I hope that helps you on AOL. Next one was G7 asked about UNF. These are folks in the den. They asked me if now UNF is UniFirst. I have no idea what they do. Some kind of financing, I guess. Now, this is a very interesting chart. I spent some time on this chart. I looked at it a while back. I could be calling this EF. I should really do that. I'm going to just use the normal ChapmanWave alternative count, because I do not want my mind to be on the wrong side. And the wrong side would say a peak C implies that it's going to go to a D. But a G/C says, aha, be careful, because the stochastic is holding at 87% in the monthly chart. MACD hasn't turned down yet. So far, the monthly chart looks weak on the candle, but the technicals are still holding up really well. Now, this is the issue. The weekly chart made a peak D back in July at 61.22, went right down to the 200-period moving average with two beautiful candles. Started already. Folks, these are the things I teach in my courses. When I do them, I teach which candles are very important. I teach the importance of these moving averages that I use. And I teach the importance of the fast-moving average of the MACD, which was giving a fantastic buy signal all the way to the last peak D, which is in the week of the 3rd of Feb at 62.75. What does it do? It slips underneath the 9 EMA, goes above it, breaks down, gives you that pattern that I call the ChapmanWave dreaded H. I say ChapmanWave because nobody else talks about a dreaded H. But it looks like a lowercase formation. And there it is. So what happens is it breaks down last week. It's down again with a lower low this week. MACD looks bad. Stochastic looks bad. On a short-term basis, my target would be 54.39, the low of the 23rd of December. Upside. Now, if there is some kind of a turnaround in the market, the upside would say that the daily has held the 200-period, trying to hold the 200-period moving average. It has to spike above 58.40, the high of yesterday, and close above it. If it does that, improves the weekly, that improves the monthly, and all of a sudden I'd say, great, this thing could now try for the candle of the 8th of May to 59.49. Those are my shorter term parameters. If the market drags us down in a left side, right side price time match, oh, that wasn't right. That should be there. To there. There we are. Okay, it failed it by 2 bars. Yeah, so this is exactly right. The most important support right now is the support right at the 57.45 area, double low of the 3rd and 4th of January. If it closes under that, 55.79 would be the simple moving average target on the downside. So, and the other thing is that if it survives this particular decline in the market, when the market turns around, even if it's a counter-trend rally, this is the stock that should participate on the upside if that monthly chart is still showing strength. Next is, Reed wants to know about LinkedIn. I also want to know about LinkedIn. LANKD. LinkedIn right now is at 99.76, down $1.57. This is a single leg A up in the monthly. It's a fantastic move from 55.98 to the recent high of 120.63. It's digesting that. Monthly chart says if 90.44, the 9-period exponential moving average, is pierced on the downside, be careful, because it's saying something is wrong. Something is wrong with the stock, because the tide, it should hold that and keep bouncing above back into the 91, 93 area. So that's very important. Weekly chart has not yet given me a sell signal. It is at PE, but the MACD is not crossed negatively, although the stochastic has. It's at 70%. So this is what we're looking at. If by Friday, this coming Friday, LinkedIn hasn't closed underneath 84.10, I know that's a long way down, but hey, in this market, I've got to tell you that number. Let me do one step at a time. First step would be 87.75 the week of the 23rd of March. If it closes under that, you've got to be careful. Why? Because 78 is the 200-period exponential moving average. I like the way this is acting. It's being forced down by the market conditions. So this is a stock that's on my list, certainly on my list, for the long side, as soon as I feel that there's some kind of stability. What I'd be looking for, peak F gap up, is actually almost an island reversal that was on the 4th of May at 120.63. I'd be looking for a test between 90.50 and I would have to say 87.75. That's the area that I'd like to start considering whether my subscribers would be benefiting from a trade on the long side in LinkedIn. It is a strong stock. Next one we've got is LL. Jim wanted to know about LL. That's lumber liquid. Is that lumber? Yep, lumber liquidators. Now, it's gone to a peak F. I'm calling this a peak F in the monthly chart. I haven't really got a signal yet, because at a peak F, what you expect is the bar that makes F closes decisively lower. That's actually that's what happened last week. But the following bar needs to have a very strong decline, preferably, if you want to become bearish, to see it close under the 9-period moving average, which is at 26.77. So far, it's holding well. But let's put it into the economic context. The lumber liquidators could be benefiting from the rise in the home builders, the increase in increased building in the home builders. So far, it's a high-level consolidation. I'd ask you if you are long or short, but I might miss out. Love my flaws. Let's see if he says anything about long or short. In other words, I would not be short the stock. Probably I'd also not be long right now. I'd like to be long. It's been on my list for years. I never get it. I think once we had it for just a brief moment. Lumber liquidators. I like the pattern. It's making an oval formation. And this, there are a number of indicators here that tell me that there's a chance we will not crash to the downside. You don't usually get home builders going to new recovery highs when you're about to have a market crash. And not only that, the kind of crashes we've had back in 87, that was my Dow Quartet, General Motors, General Electric, Triple M, and UTX. That summer, we're going to all-time highs. This is very different. Absolutely, it's a serious decline, and that's why I think we've got a rotational market. Some stocks are acting very well, some stocks are just done. They are in real trouble. So Lumber Liquidators is so far holding very well. I'd get nervous if it did close under 26.90, but so far at 28.09, LL looks to me like a really good stock. Any market strength coming up in the next couple of days, Lumber Liquidators should try for a leg. I can't call it anything else. I think a leg C above 30.12. So I'm more favorably inclined to the long side. Next is CSTR. CSTR is Coinstar. They have those red boxes, I think they're called. This is leg. I'm calling this leg E/B in the monthly chart. And the weekly chart is 64.85. Yep. This has gone to a peak F. But so far, the characteristic is of a rollover, but not what you would expect at a peak F, which would be a really sharp decline. Well, let's put it this way. If you want to call 69, is it? 69.74, the week of the 13th of April, down to yesterday's low, or last week's low of 56. Yeah, that's 16 points. Hey, I'd say that's a pretty deep slide. Now, let's look at and then you had that gap up, must have been news, earnings news or something, back on the 13th of April. So I would not be long this. Would I be short? That's the question. Showing strength today up $1.28 at 58.73. Yes, I know exactly. The way I would not be long or short the stock at this particular time, but what I would say is that if it rallies towards the 61.60 to 62 area, makes an arch formation and starts to come back, and there's another decline in the general market at that particular point, maybe 3 days' time or something like that, then I'd say, yes, this is a short, but it's not one of the ideal shorts because the monthly is still showing internal strength. So, yeah, you can need the daily to affect the weekly, to impact the monthly, but let's put it this way. If you are short, even better. If you're short, then I would say to you a strong bounce above 61.20 that only pulls back to 59.80 and then makes a new recovery high. I wouldn't be short anymore. I'd be getting out of it. That's the way I'd look at it. So I think we've got a bunch there. I know that there were more questions. I hope I'm not missing them because I'm sliding. Oh, eBay and copper. eBay, right here. I thought I mentioned copper, but maybe not. eBay has got this huge gap to the upside. So many, remember I spoke about this for months. I've been talking about those huge gaps on earnings that will become the first area to be targeted on a pullback. Until we get tops, they meant nothing. Now they mean everything. Well, eBay had this spectacular move back on the 19th of April, closed the day before at 35.87. Pow! It goes to 41.84, pulls back, makes a new recovery high, and then it goes down to a lower low at 39.03 was the gap low, but it goes down to 38.22 on the 18th. Now it's come back and it's holding. Something's going. The stocks where there's a story, I am not interested in shorting, because if you've ever been short a stock that has a story to it, you know two things. It just never wants to go down the way it should. It uses up all that time when everything else is going down. The moment there's a rally, it just spikes to the upside. eBay is looking really good. I'll get a little more into it when we get back. Basil Chapman, Dow's down 171.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi folks, Basil Chapman, and just finishing up a chart now. I had done this years ago, many times, over and over, and I lost it once again. So here it is. So the question I had was high-grade copper. So let's just do this high-grade copper. What have we got? This is the last segment. Good. So high-grade copper, don't forget my service is the opening call, very comprehensive look at the markets every single day. I showed you the charts earlier on. There's 6, 7 charts. Traders Corner, my traders, let me just show you what the Traders Corner looks like. Traders Corner has, look at that. Besides the assessment of everything we're looking at here, usually just for those who are in a hurry, need to just read and get on with it. I discuss a very quick synopsis there. Then I go through all the different stocks, even stuff we're looking at. I show the quid was retesting the previous left side high bar. I show the GLD. I've been talking about it. If it goes under 150, this Friday, it's a real problem. It's at 149 something now. I discuss the TLT, etc. So that's what I like to do. So now, whoops, wrong one. I need to get back there. Okay, so now when we were looking at the high-grade copper, I believe that's the last one we were looking at, is breaking down. And if I look at the high-grade copper on a continuous contract, that high-grade copper said that the weekly chart was breaking a down channel. It only went to a peak C and it's faded. Fading at a peak C is usually very negative. And that says that copper must hold 3.27. It's right now it's at 3.4. If it breaks down, that monthly chart can make that dreaded H. Look at that. There was one over there, and now that looking at the monthly charts, look at that. That says you had best be careful, because if high-grade copper, which is really an economic barometer, is starting to break down, that is a problem. So I'm looking at this as copper as really a benchmark for me. It was for 2 summers. It was the benchmark on the way up from the March low. I'm now looking at it and saying I'm looking at it askance, I think is the only way you can say. Now, even more importantly, there were further questions in the den about the Euro, EUR, USD. Hope I haven't skipped anything. Now, this is really important. In my work, there's a pattern that I call the left side, right side price time match. There are various ways of picking a midpoint, but the most obvious is when you get a trough in the middle of a big move up and then a retest of the highs, in this case the 200-period exponential moving average failure pattern at peak C1, C2, technique that I use in the ChapmanWave, did it twice in the euro-dollar currency pair. 1.26233 was the target with the left side to a right side price time match of the 16th of May. Well, excuse me. It took a couple of days more. We almost got there 2 days ago, and then 2 days late out of, what is this, 70 days or something, 70 bars. Well, today it smashed through that. That is a big negative. The technicals say we're not quite there, ready to bounce. The weekly chart says we aren't even close to a bounce because the MACD and stochastic are still very negative. And the monthly chart says we're in leg D to the downside, just as the monthly chart of the dollar is in leg D to the upside. And that says be careful, because 1.2431 is critical support for the 200-period exponential moving average. But then watch out, because 1.24559 was the low back in October of 2008. So that's that. So a bounce will get you back into the arch formation, making 1.2755 to 1.283. Very strong resistance. Okay, now don't forget, we've got Larry Pesavento coming up after me. You've got Dave White this afternoon. You've got Tom O'Brien. Just a fantastic slew of wonderful technicians. And I'll be back Friday. Thank you for being here. And most importantly, my opening call, check it out, 2 weeks free. We got shorts that are working beautifully. We got longs that so far have held up. Oh, those trading gods, I shouldn't have said anything. Have a great day. Thanks for being here.